Hello students, welcome to all of you Shiksha 360. Shiksha 360 provides different courses that is like JIB course, CAP course, certificate course and promotion exam course. And if you are preparing like for JAB and CAP, you will find that most of the topics in the promotion exam are also similar type of content. Clear as per the JAB and CAP, little bit amendments are to be there. Okay. So now let's start our today's session. Basics of credit. So under that, credit basically what is the meaning of credit? That is we are giving some amount to anyone or amount is coming to us. Simply you can say that amount is coming to us. Or we can say that amount is crediting to any account. Like if bank is giving the loan, like bank is giving the, so what it means that means that bank is going to credit the account of the customer. Clear? So what it means that bank is going to credit the account of the customer. So while giving the loan to the customer, what are the things bank will check here? Clear? What are the things bank will check here? We will discuss 3 to 4 parts in this session. We will cover different types of the ratio. You will find the questions in from that in the examination point of view. Like while giving the loan, what type of things you have to check regarding any particular firm or any institution. Clear? So all these things we have to discuss point by point, line by line here. So let's start our discussion on that. First of all, we have to discuss regarding the assets. So asset is to be classified under the current asset and fixed asset. What is the meaning of the current asset and what is the meaning of the fixed asset and how we can classify that? What is the meaning of the current asset? What is the meaning of the fixed asset? Any enterprise, clear, any enterprise, whether industrial, trading or other, acquires two types of assets to run its business. Clear? So any enterprise, whether industrial, trading or other, acquires two types of assets. Clear? They want two types of assets to run its business. It requires fixed assets. Clear? So they require fixed assets which are necessary for carrying on the production or business. Clear? So please remember that what are fixed assets? That is like land, building, plant and machinery, furniture and fixtures, all are to be considered under the fixed assets. Clear? So it requires fixed assets which are necessary. Clear? So it requires fixed assets which are necessary for carrying on the production or business. Clear? For carrying on the production or business, such as land and buildings, plant and machinery, furniture and fixtures, etc. The other types of assets, the other type of assets required for day-to-day working of a unit. Clear? The other types of assets required for day-to-day working of a unit are known as current assets. Clear? Are known as current assets which are floating in nature. Clear? The other types of assets required for day-to-day working of a unit are known as current assets which are floating in nature. Clear? That are floating in nature and keep changing during the course of the business. Clear? The other type of assets required for day-to-day working of a unit are known as current assets. Clear? The other type of assets required for day-to-day working of a unit are known as current assets which are floating in nature. Clear? Which are floating in nature and keep changing. Clear? Which are floating in nature and keep changing during the course of a business. Clear? And keep changing during the course of a business. It is these current assets which are generally referred to as the working capital. Clear? Which are generally referred to as the working capital. Clear? So like I think you are aware regarding the working capital and term loan. Term loan, that is, it is basically for the long term. Clear? Term loan basically it is given for the long term, like it is given for the machinery. On the other side, working capital loan basically it is given for the day-to-day work. Clear? Working capital loan basically it is given for the day-to-day work. Okay, so please remember these things. Okay, so I will repeat again. There are other types of assets, that is current assets, required for day-to-day working of a unit are known to be as the current assets, which are floating in nature and keep changing. Clear? Which are floating in nature and keep changing during the course of the business. And it is these current assets which are generally referred to as the working capital. Big industrial projects may require substantial investment. Okay, big industrial projects may require substantial investment in fixed assets and also large investment for the working capital. Okay, big industrial projects may require substantial investment in fixed assets. Clear, may require substantial investment in fixed assets and also large investment for the working capital. Clear, and also large investment for the working capital. Now further, the trading units may not require heavy investment in the fixed assets. Trading unit, like we can say that like service providing units. Clear, service providing units. We can assume that here. The trading unit, that is, we may not require heavy investment in the fixed assets, while they may be carrying huge stocks in the trade. Clear, while they may be carrying huge stocks in the trade. The here service units may hardly require any working capital. The service units may hardly require any working capital and all investment may be blocked in the creation of the fixed assets. Clear, and all investments may be blocked in the creation of the fixed assets. Okay. The service units may hardly require any working capital and all investment. I think there. Okay. I think there is a little bit like service units. They require like service they are providing daily to daily. Okay. Manufacturing units, they require high investment. Clear, in the case of the fixed assets. Now I will discuss some of the example for what is the fixed asset and what is the current asset for any specific person. Clear, for any specific person, what is the difference between that, I will discuss it. Okay. So to make the things clear, I am giving you following one example. This example, it is shared by one of the students yesterday. For example, for one individual who has taken a running auto service. Clear, for one individual who has taken a running auto service as his line of livelihood, like we can say that the person whose livelihood is basically running auto service. So for that, the auto is a fixed asset. Clear, because the person that using that same auto on daily basis, as by using the auto, he is getting the income. On the other hand, the auto, so moving and fixed at a particular place, it is a fixed asset to that particular individual. Suppose on the other side, suppose there is a dealer, another one, that is there is a dealer dealing in the automobiles and buying autos from the distributor or company is his business. Clear. Suppose there is a dealer in the automobiles and buying autos from the distributor or company is his business. So in this case, the auto is a current asset. Clear. So in that case, what is that? The auto is a current asset because the person is buying the autos from the distributor or a company and selling that autos in the market. Clear, and selling that autos in the market. As for that, it is a current asset. Clear, because his daily work is going to be based on that auto. Clear, his daily work going to be based on that autos, that is buying and selling. Clear, that is buying and selling. So in his auto, the auto, it is a current asset as that is the product in his business. So in both the above cases, auto, it is to be common. So in case of the individual who is using the auto for long time, whereas the auto dealer is not using the auto and he wants to sell the same. Okay. So for him, that particular auto will be him for his short time. Clear, will be for that short time. Okay. So hope now it is clear what is the difference between the fixed asset and the current asset. Clear. So that auto, it is only for individual and is earning is only based on that auto, that is to be fixed. And here they are selling, buying, selling, buying, selling, buying. They are dealing in that it is to mean that autos are to be current asset. Clear. Purchasing, selling, purchasing, selling. Like in the case of the another example, in the case of the individual, a house or flat purchased, it is a fixed asset. Whereas the same house or flat, it is a current asset to the builder who is in the line of selling houses. Clear. So in the case of the individual, A house or flat purchase, clear, in the case of the individual, a house or flat purchase, it is a fixed asset. Whereas the same house or flat, it is a current asset to the builder who is in the line of the selling houses. Clear. Whereas in the same house, clear. Whereas the same house is the current asset to the builder who is in line of selling the houses. Clear. Who is in line of selling the houses. Hope it is clear to all of you regarding what is the basic difference between the current asset and the fixed asset. Now move further. What are the credit facilities? I will also tell you in the upcoming session how basically we have to form the working capital method. What is the Tandon committee method? What are the different methods? Clear, we will also discuss. So the credit facilities, that is finance extended by the banks, can be classified into the different groups as under. Clear. First one, that is the working capital and term loan. Clear. Working capital and the term loan. That is, it is given basically based on the nature of the asset. If a bank extend, clear, if a bank extend credit to enable the borrower, clear, if a bank extend credit to enable the borrower to procure current assets, clear, to procure current asset, that is, in that case, working capital it is to be given, clear. That is current asset, that is for day-to-day work, clear, for day-to-work. If a bank extend credit to enable the borrower to procure current assets, clear, if a bank extend credit to enable the borrower to procure current assets, such type of credit, okay, such type of credit, it is known to be as the working capital loan. Clear. Such a type of credit, it is to be known as the working capital loan. Another one, working capital to be sanctioned for purchase of the current assets only. Clear. Working capital to be sanctioned basically for what? For the purchase of the current assets only, that I have already discussed. That is for day-to-day work. Clear. For day-to-day work. On the other side, second one, that is if the and term loan, that is term loan, it is given for the purchase of the, like we can say that, machinery or fixed assets. Simple language, that is fixed assets. Next one, if a bank extend credit to enable the borrower, clear, if a bank extend credit to enable the borrower to procure fixed assets, clear, to procure fixed assets, then such facility, it is to be known as the term loan. Clear. Then such facility, it is to be known as the term loan. Clear. So if a bank extend credit to enable the borrower to procure fixed assets, clear, to procure fixed assets, then such facility, it is to be known as the term loan. Clear. Then such facility, it is to be known as the term loan. And in the case of the small units, clear, and in the case of the small unit, like we can say that up to rupees 5 lakh, we can sanction composite loan also. Clear. In some cases, that is, composite loan are to be also sanctioned to enable the borrower to purchase both the current asset and the fixed asset. Like we can say that, like we have discussed the PMEGP scheme with all of you. Clear. So under that loan, it is given in the form of the term loan also, and in the case of the working capital loan also. Okay. Generally. Okay. Here they have said 5 lakh. Clear. Generally, we can say that presently in this way, loan is to be given, that is for the term loan and working capital loan. Clear. For the purchase of the machinery also, and for the case of, for the daily day-to-day work also, we can given amount. Clear. So composite loan, what is the meaning of composite loan? Basically to enable the borrower to purchase both current assets and the fixed assets. Clear. To enable the borrower to purchase both current assets and the fixed assets. Next one, that is what is fund based and non-fund based. As in the previous session, we have discussed regarding the bank guarantee. So bank guarantee, basically it is a non-fund based. Letter of credit, it is also comes under the non-fund based. So fund based and non-fund based. How we are parting with funds by the banks, parting with funds. So when the borrower, please try to understand, when the borrower approaches with the request, when the borrower approaches with the request to extend finance credit to purchase either the current assets or fixed assets. Clear. When the borrower approaches with the request to extend the finance credit to purchase either the current assets or the fixed assets, so bank will open a loan account, that is working capital loan or the term loan, depending upon the nature of the asset which the borrower want to purchase. And the proceeds of the loan will be sent to the seller. Clear. And the proceeds of the loan will be sent to the seller. In this case, bank is parting with the funds. Clear? So hence, that is, they are dealing with the funds, simple language. Hence, such credit facilities are to be known as the fund-based credit facilities. Clear? Hence, such credit facilities are to be known as the fund-based credit facilities. Example, OD, overdraft, OCC, credit facility, that is term loan, housing loan, vehicle loan, that are all to be considered under the fund-based. Clear? That all are to be considered under the fund-based. Next one, that is non-fund-based credit facilities. Clear? Next point which we have to cover here, that is the non-fund-based credit facilities. So in some cases, clear? So in some cases, borrower may request the bank. Clear? In some cases, borrower may request the bank to give guarantee or undertaking. Clear? In some cases, borrower may request the bank to give guarantee or undertaking based on which they get goods. Clear? In some cases, borrower may request the bank to give guarantee or undertaking based on which they get the goods without immediate payment to the seller. Clear? So borrower may request the bank to give the guarantee or undertaking. That is, they can pay, like we can say that if they are going to purchase the machinery, so they are giving that deferred payment guarantee like at that place. Like after every 6 months or after every 3 months, they will pay that much amount. Clear? And the tenure of the loan, it is to be like, we can say that like 10 years or 15 years. Clear? Depend upon case to case. Okay. So in some cases, borrower may request the bank. Clear? In some cases, borrower may request the bank to give a guarantee or undertaking based on which they get goods. Clear? Based on which they get goods without immediate payment to the seller. Clear? Based on which they get the goods without immediate payment to the seller. Bank extends such facilities. Clear? Banks extend such facilities by the way of bank guarantees and the letter of credits. Clear? So in which way the banks extend such facilities? By the way of bank guarantees and the letter of credits. Clear? By the way of bank guarantees and the letter of credits. And these facilities are to be known as the non-fund based credit facilities. Clear? These facilities are to be known as the non-fund based credit facilities. Clear? Till now, we have discussed just basics of the bank guarantee. Clear? We have discussed just basics of the bank guarantee. And in the next session, we will discuss what are the types of the bank guarantee also. And later on, we will cover what are the different types of the letter of credit. Very, very important for the understanding purpose and for the examination point of view. Now further. Example, bank guarantee, letter of credit, deferred payment guarantee, and bills co-acceptance. All are to be considered under the non-fund based limits. Clear? All are to be considered under the non-fund based limits. So in the case of non-fund based limits, funds will be parted by the bank only in the case of eventuality and not immediately on the receipt of goods by the borrower. Clear? So what is the meaning of that? Here, basically, banks give just the guarantee. Like in the deferred payment guarantee, borrower pays after every 6 months or 3 months installment to the lender. And if the borrower fails to pay the installment, clear? If the borrower fails to pay the installment, then the guarantee to be re-invoked. Clear? So in that case, guarantee is to be re-invoked. Clear? So in that case, guarantee is to be re-invoked. Clear? So please remember that what is the meaning of that. That is, in the case of the non-fund based limits, funds will be parted by the bank, and when only in the case of eventuality and not immediately. Clear? Only in the case of eventuality and not immediately on the receipt of goods by the borrower. Clear? Only in the case of the eventuality and not immediately on receipt of goods by the borrower. Clear? On receipt of goods by the borrower. Okay, so please remember all these things. Now move to the next one. What is inland credit and the forex credit? Clear? Inland credit, that is when we extend finance. That is when we extend finance, or simple language, loan. When we extend finance to meet the needs of the business, done within the borders of the India. Clear? When we extend finance to meet the needs of the business done within the borders of the India, then it is to be known as the inland credit. Clear? So in that case, it is to be known as the inland credit. And when the borrower is engaged, clear? Next one, that is when the borrower is engaged in export and import business globally. Clear? When the borrower is engaged in export and import business globally, even if we extend the finance, clear? Even if we extend the finance in the Indian rupees, like such as packaging credit, clear? So it comes under the forex credit, clear? It comes under the forex credit. I will explain once again. When the borrower is engaged, clear? When the borrower is engaged in the export and import business, clear? When the borrower is engaged in the export and the import business globally, even if we extend finance, clear? Even if we extend finance in the Indian rupees, clear? Even if we extend finance in the Indian rupees, such as packaging credit, clear? Such as packaging credit, so it comes under the forex credit, clear? So it comes under the forex credit. Okay, so this is the meaning of the inland credit and the forex credit, clear? So in this session, from the static, first of all, I will tell you what we have discussed. We have discussed what are the current assets and what are the fixed assets, what is the term loan, what is the working capital loan, what is the composite loan, what is fund based and non-fund based limits, clear? And what last one, that is what is inland credit and the forex credit. So I will discuss what in the next session, that is in the evening section. What is debt equity ratio? Clear? First of all, we will discuss what is debt equity ratio. Second one, what is debt service coverage ratio? Clear? Debt service coverage ratio. Clear? So we will discuss both the points in the evening session. Along with this, I will discuss some of the numerical portions. Clear? I will try to discuss some of the numerical portions along with that, so that you are able to understand how we have to calculate these things. Clear? Why I'm not covering in this session? Because it will take at least 20 to 25 minutes, so that in a single go we will try to understand all these points. Clear? These are different types of the ratios. Clear? What is current ratio, what is acid test ratio? I will discuss all these ratio with you, so that we are able to understand what type of the things we have to check while giving credit to any firm. Okay, all these are the important points for the examination point of view. Either if you are preparing for the CAB, JAB, or for the promotion, in every, these are the basic questions. Okay, so thanks to all of you for attending this session. Hope you are able to understand some new terms, and if you find any doubt, any query in any point, you can ask in our group or you can mail on our email ID. Thanks to all of you for joining this session.